European Central Bank, the ECB, will announce its decision on rates at 12:45 p.m. UK time on Thursday, with its press conference 45 minutes later. It's widely expected that it will also deal its view on its programme of quantitative easing. Will it stick or twist? Josh joins us now with some more analysis on this. That's one of the big issues here. We don't think there's going to be any move on interest rates per se, but it's the quantitative easing programme as to whether or not they're going to move on that at all.
Yeah, exactly. So I guess the word of this meeting is extension, and we do expect them to extend. I think it's pretty much a foregone conclusion that we're going to see an extension to the current QE programme due to run out in March. Now, bearing in mind that we've heard from Mario Draghi recently, who said that if they or when they end this programme, they will actually taper it coming into it. They won't necessarily just abruptly end their QE programme. And given that it's now, say, just over 3 months until that ends to the QE programme, doesn't really leave them much time for them to taper it for that one. So I think the extension is going to be pretty much a foregone conclusion, and I think the markets are likely to have factored that in already. I think the big question here is tapering. Are they going to be able to sneak in what is a sort of negative message in amongst a sort of wider positive message, and could we see a sort of adverse market reaction because of that?
The backdrop to this, of course, is you've got political upheaval at the moment. Italy, of course, is the most recent unknown. We've got the Brexit negotiations that are ongoing, which potentially could be eurozone negative, and you've got an unknown quantity coming into the White House in the States. There's a lot of headwinds that are pushing against the European Central Bank and the EU generally. That aside, how should we look at trading this? I mean, the euro, strangely enough, ended up higher after the referendum recently in Italy.
Exactly. So we're seeing the strength coming in at the moment, and this is euro dollar on a daily time frame. We can see this big move higher that we've seen earlier in the week. And I guess, you know, this sort of idea for me that we could actually see this message about tapering almost overshadow the wider message of extension. Could pave the way for further gains for the euro dollar. And we can see on the daily time frame we've broken through this 107.10 mark, and certainly if we look in terms of a shorter time frame, we can see that we've got this sort of basing pattern following on from a very long-standing deterioration that we saw throughout November. So given the deterioration that we've seen and the fact that we haven't really seen any sort of retracement, this break up above 106.86 essentially paves the way for a period of strength that essentially would be a retracement of the deterioration of 113, but not necessarily negating the wider trend, which, if I take it back to the daily, clearly is towards the downside. We've seen it in play for a number of months now. So I do think we've got further upside to come. I do think that we're likely to see this sort of tapering message, if it comes about, really overshadow that extension message, and that could pave the way for another jump higher. We're seeing a retracement so far at the beginning of this week, but that could actually be a good thing. That could give us a more sort of advantageous price to be able to get in on a long for euro dollar. So, you know, this is going to be an interesting one, but for me, I actually think that we're more likely to see gains for the euro than we are weakness, which certainly isn't true to form considering what Mario Draghi's done in the past. But I think he's running out of bazookas.
Yeah, the other aspect of this, of course, is the quantitative easing programme that's been undertaken has been positive for the stock markets generally. And of course, Germany's been a big beneficiary of this because it's got the quality of the bonds that the European Central Bank wants to buy. And this 2 trillion or so that they've put into the markets of euros, a lot of it has been taken up by the German markets. What about the German DAX? Because the markets have continued to rise. There's got to come a point where if and when QE does stop, that perhaps the potential for equity markets then starts to run out.
Yes, but what I would say is that generally what we've seen so far for this year, and certainly what's happened with this referendum in Italy, the same kind of thing with Brexit, the same kind of thing over in the US. It's almost like markets just continue to try and grab onto any sort of positive news story, and they're largely disregarding any of the negatives at the moment. And that's certainly what we're seeing at the moment. We're seeing the DAX actually breaking higher today, and we're seeing it really push into what could pave the way for a very strong end to the year. Now, this daily time frame shows exactly that. We've seen this level 108.07 essentially providing resistance for over 4 months now. Time and time again, it fails to break through that level. And I've been saying for months, when we do break through this level, then that will be able to provide us with some sort of directional sort of momentum. But until that happens, it's largely been consolidation. Now, we've finally seen that. And if we look from a sort of wider perspective, you can see that the next major resistance level, given that we've now gone up above this other peak at 108.79, is all the way up 500 points away in 114.34. So we're actually in an area of pretty much no man's land with no resistance to be really looking out for. And given the fact that we're actually seeing this breakout at a time when people are feeling very positive and coming into this period where we typically see this sort of whole Santa rally story, yes, we could start to see a little bit of weakness coming into play if we saw, as I said, people focus on a taper message, if we get that more so than the extension. But the way things are going at the moment, I just think people see any sort of pullback in equity markets as an opportunity to buy. And as long as we remain above that crucial 108.07 mark, I see this as a buy, and I'd see any pullback as an opportunity to be getting in at a better price. You can see we've got that little swing low that we posted just above that 108.07 at 108.17, and that really sort of adds to the validity of this support structure.
Okay, thanks, Josh. That's a look at the European Central Bank interest rate meeting. At 12:45 is the time of the announcement on Thursday. That's UK time, and 45 minutes later will be the start of the all-important press conference.